Hi guys, welcome back to the Super. Today you'll be getting a full breakdown of this topic, bank loan versus HDB loan. Especially if you're looking for a new house, this topic is definitely going to surface, and I'll give you a full breakdown including 5 key points on why you should choose a HDB loan instead of a bank loan. You know, I had a friend who actually recently converted his HDB loan to a bank loan, and it looked actually a good decision until the bank loan rates actually went up. So if you're keen to hear the story, continue watching on. Okay, before we start, this topic only applies if you're looking for a HDB flat, be it for BTO or be it for resale. If you're looking for a private property, of course there's no HDB loan to discuss. So assuming you're looking for a HDB flat, you know, the main key benefit of a HDB loan is fixed at 2.6%.
2.6%.
This rate has not changed good times or bad times, but a bank loan rate can change. You know the story of my friend, he actually changed his HDB loan to a bank loan to save that 0.6%. And at the point of time when signing on, the bank actually offered him a freebie. So it looked quite a good deal, but you know, within 9 months or so, the bank loan rates, the floating rates actually changed, and right now it's about the same as the HDB rate. So there's really no incentive for making the whole hassle to change your bank loan rate. And what happens in future? If bank loan rates continue to escalate, you'll be actually at a losing position. So take note, HDB loans are fixed, which is pretty good, especially if you're doing planning wise. Your CPF cash flows all are easy to predict with a HDB loan. The second key reason of choosing a HDB loan is it allows you to borrow more. The loan to value LTV is at 90% versus a bank loan which is only at 75%. Now, if you're a young couple, you haven't worked too many years, naturally you may have some limitations in terms of your CPF OA savings, in terms of your cash savings. So this really helps you because being able to borrow 90% allows you to qualify for a bigger budget for more housing choices. So there's the other factor also. Previously, HDB required to wipe out everything within your CPF OA if you are taking a HDB loan. But right now, you can actually choose to keep some portions, the first 20,000 inside your CPF OA. Both you and your spouse keep the first 20,000, earn that extra interest, this extra 1% interest within the CPF OA, and borrow this up to 90%. So this is a real key benefit. You can borrow more using a HDB loan. The third key benefit in taking a HDB loan kind of relates to the second point. Your down payment for HDB loan is only 10%. Versus a bank loan which is 25%. But not only that, when you take a HDB loan, your 10% can be fully paid by CPF OA itself. On the other hand, if you take a bank loan, you need to come up with 5% mandatory in cash. The remaining 20% you can choose using cash or CPF OA. So if you have some cash constraint, definitely the HDB loan works a little bit better for you. The fourth key benefit of HDB loan is you can make changes to that loan structure anytime. You can increase the repayment, you can pay lump sum, SMN. All this is to save interest costs in the long term. You know, I'm using the OCBC bank loan. Then what I see right now is there's clauses involved. You must serve a notice period, 1 month or 3 months, and there may be certain penalties involved in terms of repaying. So when it comes to a HDB loan, you are hassle-free. SMN, you have a bonus, you can make lump sum repayment. SMN, your pay increases, you can actually tweak the monthly repayments to reduce your total interest over a long period. So HDB loans actually give you this flexibility. SMN, you want to repay more, SMN, you have lump sums to throw back into the mortgage itself, you can do so. So keep that in mind. The fifth key point is when it comes to late payments, HDB loans are definitely a lot more lenient. You can go and check it out. I'll put up over here a quick snapshot to show you. There's financial assistance measures just in case you're in financial trouble for whatever reason. You can get family members to chip into the monthly repayments. Just in case you're into financial trouble, you can actually renegotiate or get certain social service to help you subsidize some of your monthly repayments. On the other hand, if you're on a bank loan, there is probably no chance that you get any help. Banks are there for a profit measure, and bank loans definitely will impose interest and penalties when it comes to late payments. So keep that in mind. A HDB loan is definitely a lot more lenient when it comes to late payments. If you have benefited, smash on the like button so that more Singaporeans can see this sharing and really benefit in terms of their mortgage planning, and click on the subscribe button below and get notified whenever we release a financial video for you, and join our community to become more financially savvy. You know, there's actually a bank loan package that I actually quite like if you're looking for a HDB house, and this bank loan package is actually by POSB, and you can go and check it out. They actually lock in the interest rate 5 years for you at 2%. This is the only package where I'm really more positive versus the HDB loan itself. But on the other hand, this suits people who can finish, in my opinion, their bank loan payments within 5 years, just in case after 5 years the loan rates spike up. So in all other situations, I'll definitely recommend you to consider HDB loan a little bit more. So with that, I'd like to invite you to leave any questions you may have in the comment sections below. I'll sign off from here and see you in a future video. Take care and goodbye.